S&P 500 is down big today, almost 2% at lows. And all of this is coming from Trump tweeting saying that China, President Xi are being hostile. And this is scaring the living crap out of the market overall. We've seen just how fast this market pullback can happen if there is not a ton of confidence behind the market in general and our relationships with other countries such as China. Now, first and foremost, I want to state that bulls are still in control. We're going to talk about in this video why I do think we are going to bounce, and this is just a momentary pullback. But I do want to also cover one thing that is not looking good at all on this weekly chart and exactly what would have to happen in order for us to see a sizable pullback or a correction of about 6.5% to worst case 10%. If there's anything that you have learned from me, it's that we need to stick to the strategy, but more importantly, we need to remain objective. I am not somebody who's going to come out here and fearmonger, but I am somebody who is going to stand here and remain objective and say that, hey, if XYZ happens, if these certain supports that we're going to talk about in this video break, if selling pressure starts to enter the market, then we need to be careful for what the worst case scenario is, which in my opinion, like I said, is about a 6.5 to 10% correction. If you don't know who I am, my name is Peter DiCarlo. I've been a full-time quantitative trader for the past 11 years. I've grown my fund to over $5.5 million with only a 61% win rate. Everything that I do is based off of technical analysis or data. I actually don't care about fundamentals of a company. I don't necessarily care about what is currently happening out in the market or in the world, such as geopolitics, trade wars, tariffs, jobs reports, none of that. All of my trading is done entirely off of my technical analysis and my trading system. Now, if we start by zooming in on the S&P 500 first and foremost, you're going to notice that since we hit that low in April, we have done nothing but absolutely break out to the upside. Now, we called the bottom back there in April. If you want to understand why we were calling the bottom back then, it's because we were trading at our smart money or institutional buy zone. And if we zoom out to the monthly chart, which is one of the biggest charts that we trade, which we will be using in today's video, you will see that price pulled right back into this market bias or this fair value zone. Each and every single time that we have pulled back into this zone, except for the 2008 financial crisis and the dot-com bubble, we have bounced. That's why we were buying the bottom in 2022, buying the dip in COVID, and buying the most recent dip very heavy back in March and April of this year. Now, if you want to get access to that indicator as well as our entire trading system, it's completely free down in the description. And under step 3, you will see the market bias mastery course, which will show you how to get access to that indicator to find those massive discounted zones. So this is why we were very bullish at the time when everyone was worried, because in most cases, when price pulls back into this level, we're going to bounce and we're going to have a massive breakout. Now, if we zoom back into the daily chart, we're going to use the same exact principles that we use on the bigger time frames right here. The way that you should be looking at multiple time frames is very much so through the framework of if and then, meaning if this daily fair value or daily market bias breaks, then we will move down to the weekly fair value. And if that weekly market bias / fair value breaks, then the monthly will come. And that's basically how this happens. Think of these as rungs in a ladder. Now, the strongest one that we have is the monthly time frame, but as you can see, it is very rare that price will actually pull back into these support levels on the monthly time frame. Now, you could have an entire strategy where you just simply wait every couple of years and buy these significant discounts. But for me personally, that's not enough of a consistent strategy where I can actually make money month after month, week after week with it. In order to do that, we have to actually use the same principles on different time frames. Now, going back to this daily time frame, you're going to see that each and every single time that price pushes up, we normally pull back into this market bias or this fair value level. Now, these bands above it, the white one and the green one, are deviation bands. And these basically show us when the market is short term overbought, which is that white level. And in most cases, price will reject from that level, come back into the band, and continue bouncing. The red band is the extreme overbought value. And that is normally where price will see a sharp discount and rejection, I should say, off of that level and come back into that discount line. So you'll see that we've been moving over the past couple of months in a very uniform fashion, or what we call in the technical analysis world, structure to the upside. Each and every single time that we get a panic sell into this bias, we get a expansion or a breakout. Back in July, the market dropped within a 2-day period 3%. Price bounced the next 2 weeks nearly 4%. Price pulls back again into the bias. Price breaks out, pulls back into the bias, price breaks out, so on and so forth. And so even with this massive 2% drop that we have seen here, price is pulling back into this bias and into the short-term smart money zone, which for those of you who've been following me for a while, you know that the smart money zone is basically one of the strongest support levels that we have in the market. So just looking at this right here, it seems that price should bounce and that this should be a good opportunity to go long. If we also look here, you will see on the right side of your screen the volume profile indicator. This is a free indicator that you can also get within our course library right next to the market bias indicator, which will show you buying and selling levels. These thick areas of volume on the volume profile tend to act as major supports. So looking at this $660 level, this is a key indication that we will most likely bounce here. Now, if price does break here, there's a very thin area of volume on the volume profile. Price would most likely move to $645. And hopefully from there, we would test another bounce. So short term, everything is still bullish. Everything looks fine. But if we are remaining objective here and we zoom out to the weekly chart, I'm making this video at 2:38 p.m. So there's still about 90 minutes until this weekly candle closes. But if we are remaining objective here, this is the first time since back in December of 2024 that the BX trender on the weekly chart is closing red. Now, this indicator here is one of the strongest indicators that we use within our trading system. That is why it's step one within the trading system. If you only take away one thing from everything that I teach, the BX trender should be the most important thing, which you can also get access to this indicator and my specific settings right there for free. Now, the reason that this is such a strong indicator, especially on a bigger time frame like this, is that it is showing buying and selling pressure. But more importantly, since we're looking at this on a weekly time frame, it's showing macro buying and macro selling pressure. And in most cases, you can see here, when the BX trender turns red, it's an indication that price is going to correct or that price is going to pull back. And where does it normally pull back to? You guessed it, into the weekly timeframes market bias or fair value level. You can see we had a pullback here, price rallied nearly 20%. Pullback here in 2023, price rallies again. Pullback here in 2024, price rallies, price broke here in March of 2025. Remember, when price breaks those levels, then we have to zoom out to the bigger time frame, which in this case is the monthly, and price actually bounced off of the monthly. So with that said, what worries me here, and the main thing that is different today versus all of the times in the past 6 months that we have bounced off of this level, is that every time we bounced off of this level prior, the weekly BX trender was green. And this time, the weekly BX trender is red. And so if we are remaining objective here, the short-term structure and short-term trend is still bullish. But if that breaks down next week, just looking off of this weekly chart, it seems like there's a very good chance that price will reject off of this deviation band. Price will pull back anywhere between 6.5% down to about 10% to test this fair value range. And from there, price will most likely bounce and have a very strong push for 6 to 12 months from that point on. Now, my specific plan and strategy from here is that I'm going to continue to trade the market long until that short term structure breaks. This BX trender here does worry me, but we have seen times in the past where it quickly turns red only for the very next week to break out to the upside. So, what I am more so worried about here is this structure on the daily to continue to hold. So, I'm not going to just close all of my positions, freak out, say that there's a market top. I'm not doing any of that. There's still a very good chance the price bounces. But we do need to remain objective here. And if this starts to break down, then we have a very good chance of, like we said, a 6.5 to 10% move to the downside. I hope this video helped, guys. Thank you for all of the support. Check out all of our free courses and our trading system. The link is in the description. We've helped over 20,000 students just like you achieve profitability as high as $1 million all the way to as low as $10,000. This strategy and these indicators work no matter what type of capital that you are working with. The most important thing is that you need to actually learn the system, stick to the system, use proper risk management, and most importantly, use discipline.